is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I'm just putting in a little notation here, F/C. All right, here we go. Fabulous 2 hours, of course, start off at 9 o'clock here at Eastern Time. Yeah, TFNN, Steve Rose, and Tom and Steve together. And then I come on 11 till 12. Then you got Larry Pesavento. Then we've got, I believe it is that the Nadex hour? I can't remember offhand. And then we've got Dave White. And we've got Ken Shreve. And then Tom at 4 to 6. So full programming. I mean, this is... Wow, Monday, you just start off the week and we go right in there. So go to, if you're looking at TFNN, you're looking at TFN Mobi, or if you've got your cell phone, you got it already, or if you're just looking at the Tigers Den, you will see that I've got a chart up of the Dow, and it is at this point at 13,097. Remember Friday we went right into the 13,000s? So 13,097 up 2157, a new recovery high. Now, this is fascinating for me because you've got this, I always talk about the arch formation that makes a lowercase h that can turn into a consecutive series of m's, lowercase m's, little arches. Same thing happens on the upside. You can get a series of cup formations. A large one, and then a whole series. How that breaks out to a new recovery high from the left side, important low bar, is very important to be able to take you to the major high. And in this case, that major high would be 13,338. So I'm going to get into that in a moment. I just wanted to show this chart that I'm showing here can be broken up in a number of different ways. I like to think of it as very simple. I'm going to put this in just so that you can see it. There. And now I'm going to make a larger cup, and I'll explain what I'm looking at. Okay, now I should change the color of the last one. So we go gray. Oops, it's going to be a problem. Gray. And gray again. Pity it should actually match, but it doesn't matter. Okay, there we go. Now, what you will see is that if you look at the 13,338 high that was made on May the 1st, the price came down of the Dow to 12,035, made a doji low on the 4th of June, and then it's worked really hard to get to the previous congestion area around about the 12,930s, broke above it, went to 12,961, pull back, and has now got a couple of waveform notations that are perfectly legit, and it's easy enough just to put them in. But the most important thing is to note that the MACD, the moving average convergence divergence, is expanding. The fast-moving average is going above the slow-moving average. And you can see that the fast-moving average of the stochastic, this is called the slow stochastic, is going above the 80% level, but the slow one, the red line, is only at 70%. Now, in my work, what happens is you have to start making decisions. The price has moved higher, and with that price movement, all you need to do is say, fine, I have time now to decipher and within the ChapmanWave methodology what notation this is, because if this is F and the MACD was not confirming, in fact, the MACD, the fast-moving average, was below, I'd have to say, whoa, be careful. This could be a final move before it comes back into the body. You remember the body of the arch on the way up? This would be the body of the cup on the way down. And start to test the 12,083 9-period exponential moving average, etc. Aha. So now you're trying to put the whole package together. Let's do that step by step. It's Monday. It's the start of a week at 877-927-6654. Thank you, Al. My wonderful engineer is always correcting me here, or just giving me a heads up. Of course, it's a diagnostic trading hour with Daryl Martin. Fabulous show. Thank you, Al. And it really is a terrific show. And it's a great medium. I haven't gotten there yet. I'm working on it. I'm just clearing my head. I've got a number of different things I'm working on. So let's go through this particular pattern at the moment. Right now it's saying the Dow's broken into that area between 12,930s and 13,330s, that previous high. And until you start to get signs that say, whoa, be careful, there is a divergence between the technical indexes being technical tools or technical indexes being not complementing the price move. There's a divergence, a negative divergence. I'm going to just say, so far, the move to the upside is not complete. There should be higher highs if this is leg C, which I'm favoring right now. I'm going to put in a little plus sign right here. I've done it on my other charts. I'm going to do it right here to show that that low right on, remember I was talking about the 200 period exponential moving average, the day of the 12th of July at 12,492. I'm going to call that a peak A as it ran up to the high of the 16th and pulled back for a day, then went to a new recovery high, 12,977. I'm going to call that B for now. E/B, kind of leaning a little towards the B, pulls back very sharply, doesn't undercut the 12,492 level. It goes to 12,521, and now it makes a new recovery high. I'm calling this F/C with my leaning towards C just at the moment. I don't need to do anything else because it is above the previous resistance level. It is now in new territory from the May high, from the pullback that was formed June the 4th. So now what we're looking at is a rally that's kind of working. I grabbed the 120-minute chart and I haven't notated this one. This is a very easy one. It goes peak A, B, C, D, and we just squeaked to an E today. Ha! What does that say? That says be a little bit careful here. Although the stochastics at 96%, that's very good. MACD is expanding, that's very good. Just the pattern says that every time we've gone to the D or the E, you've got to be a little careful because it could be a sudden turnaround to the downside. Okay, so that's that. Now I'm going to run through the other indices, then we're going to take calls. SPX.X, this is the S&P 5. I always type it on the chart by mistake here. Let's take it away. Okay. Oh, so where does this put us now in the Dow as a possible top? Well, we have to wait for a lower high bar. Let's just say that's tomorrow. And then we have to wait for a new high bar if this is a correct wave count. And that could take us to Wednesday. So Thursday could be the first time that we get a pullback and a peak D. And the other peak Ds, as you can see on this chart, peak D at 13,338, peak D at 12,961. So it's had a habit of making peak Ds in the daily. So that's a heads up, right? So we're going to get to the other indexes. Am I typing the correct? Yep, SPX.X, that's the S&P 500. And this is even more interesting. Why? Because lately, I've noticed that the ChapmanWave count hasn't always been in absolute synchronicity with the S&P, and right now it actually is in synchronicity. So that says to me, I can also count this as a potential F/C. And it says you can still go to a G/D, and then you've got to be very careful. And here again, the stochastics at 60%. I want it above 80%, holding above 80%. It's the simplest rule you could ever use. Above 80%, the price is going to hold. Below, you got to be a little bit careful. And that's the way it is. So that's the same thing. Let's go to the Qs, and now I want to do the different indices. Here we go, the Qs. Now this is a little different. They are lagging. The last high was 65.31. Today's high is 65.31, parallel. So if the Qs are able to decisively break 65.31, get into the 65.50s, all of a sudden you've got that gap right over there on the left on the May the 4th at 65.83. That gap, that's the high, and that gap could possibly be retested. So let's go to the IWM. Now this is going to be interesting. Why? Because lower highs and lower lows. And this rally that we popped up to today to the 79.91 level, the IWM is at 79.11, down 21 cents. The Qs, I forgot to tell you, the Qs are right now at 64.96, up 9 cents, up 10 cents. Now, this is going to be very interesting. Why? Because if the IWM, which occasionally is leading to the weak side, I've got to respect that and say, okay, you can't have your generals, that's the Dow, moving higher for very long unless you're going to have the soldiers, in this case the IWM and the NYA, I'll get to that in a moment, moving as well. So if the IWM breaks under in the next 2 days, under 78, it's the 79.10 today, right now, that's going to be a big negative, and that'll say, uh-oh, failure pattern is probably unfolding as the MACD deflects lower. Now let's add a couple of things. The NYA, I'm only doing dailies right now. I could spend the rest of the show doing the weeklies and the monthlies. Now, the IWM made a lower low, so this is either brand new leg A or a continuation of the old buy mode to E. It sounds complicated, folks, but if you're looking at the charts, let me just do this. It is not complicated at all. Why? Because that high that was made on this is the New York Stock Exchange index at 79.12, up 81 cents. The high was made at 79.05 on the 3rd of July. Didn't see a new recovery high until Friday, went to 79.32, and today it went to 79.39. So here again, the stochastic is fading. Now, what I wanted to mention earlier on, yep, MMS, you got that right. Now, what we are looking at in terms of the indicators, let me go to, this is what folks, my service is the opening call. It's just, as I'm talking now, this is as comprehensive as my daily newsletter is. It gives you the overall market, what we're looking at, why we're looking at it, blah, blah, blah. But most importantly, my Traders Corner gives you the picks that we have, as longs or shorts. And my bias is still trying to find, and so far pretty successfully, I must say, the short side of the market. And as long as that's working, I'm going to keep going for that. I see more potential looking out a number of weeks on the short side than I do on the long side, except for specific areas on the long side. So now if you look at this, is what I show my subscribers every day. This is the Dow 120-minute chart. I'm circling it in leg E. I think leg E, I'm quite convinced this is probably leg E, and that for the rest of the day we might be pulling back. I'm not confident about that. I'm saying there's a good chance that we could pull back. But I'm watching the volatility index, which is jumping. It's a 17.84. If the volatility index tries to fill the gap at 18.47, I must respect that as some sign of strength. But remember, over 20s for the volatility index. This market goes way lower. In the teens, there is buying pressure. Now, my ChapmanWave trend gauge, which flashed a rug pull for Monday, worked again today. Beautiful. I'll be right back. A completed deep at. Aha. Thank you, Larry.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back, and the Dow is now down 9 at 13,060. S&P is at 1383, down 257. And we have Michael from New York on the line. Hi, Michael. How are you?
Good. Happy Monday to you.
Happy Monday to you.
I'd like to look at Intuitive Surgical today. I was wondering if you could walk me through the count on the monthly.
Oh, that's an interesting one. Just, Michael, I wanted to get you online just in case we lost you. I was going to take just another moment. I wanted to show for those folks who are looking at Tiger TV, because my charts, I've spent a lot of time now trying to get as many white background charts, because some people like the black. I happen to still prefer the black. I identify all these little patterns so much easier. I'm just so used to it, I guess. And the white, some people like the white. So I wanted to show the Dow Diamonds in leg D going to E this morning and then pulling back. That's usually not a very good sign in the short term, but if one uses those technical tools that I was talking about before, the slow stochastic, and there I use the parameters of 14,331, 20% and 80%, and you can see right now that's at 96%. So there's nothing wrong with the Dow Diamonds. They would have to fall below the 9-period exponential moving average. That's that red line at 129.50 to really start to make an impact to get the stochastic down to the 86 or 83% area. So far, I still have to believe there's internal strength here in the market, even if we pull back a little bit today, you can see the same sort of thing in the patterns that I'm looking at with the cup formation in the Dow. This is actually a triple cup formation, and each one's going to a higher high and a higher low. So far, that's the pattern. I just wanted to get that because some people have asked me if I wouldn't mind just quickly clarifying some of those techniques as they apply to the Dow and the diamonds. Now, what we're looking at is if we go to ISRG, which is Intuitive Surgical, and some of you might have remembered that I spoke about the restaurant stocks. I identified CMG, I identified ISRG, I identified a number of stocks that have pulled back that were great, absolutely fantastic winners over the last 3 years that were showing signs that they could possibly making what I call a hat-trick top. Now, let's go to that because Michael's question is based on the Chapman wave. What would I be looking at in terms of notation? So let's do this. If we go all the way back to the start of its move, and I can't remember if this is split, at $7.34, we're talking about a stock that's trading here at 487, down 11, and you start all the way back in March of 2003, you will get an ABC, D, but because the fast-moving average of the MACD, the yellow line, was still so strong, there were no down arrows. The letters are a little high up because this doesn't automatically gauge itself to a quarter of an inch or something above the peaks or the troughs. Those letters move proportionally to the parameters of the chart pattern we're looking, of the chart dimensions that we're looking at. So this went to EF, and then what happened is a very unusual pattern. It's what I call, I always raise my arm. It's like in the den, we've got that little character, you raise your hand up, excuse me. Well, this is the same thing. This right arm extension took it all the way to a G top at 139.50 in January of 2006. Then there was that real sharp move down, and there was that rectangle formation, like a flag formation, but it never broke the low of 85.63 March of 2006. I love it when these cycles work. March has so far been the pattern for this stock. Then it starts a brand new move to the upside. It goes peak A, B, C, D, and as you know in the Chapman wave, we look for a peak D. That's where the song goes, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. And then what does it do? It makes a doji, a long-legged doji at 359.59 in December of 2007 with a round number close of 323. Folks, to get round numbers in a monthly chart is something really unusual. I have found so many charts that have done that over the last 2-3 months. This is going to be quite an interesting couple of months coming up. And then what happens, I get a sell signal, but the doji, the long-legged doji, this is my own interpretation. It's my own, like I've got the Roman candle doji, Chapman wave Roman candle. So I've got the Chapman wave long-legged doji. Now, I'm sure there are many books that talk about the doji with a long wick on either side. I have a special way of looking at it, and it seems to have a very high rate of consistency, and that is, regardless of which way it breaks out the very next bar, it's going to try to come back and touch the candle, and that candle would be between 328, the open, and 323, the close. Well, lo and behold, it goes all the way down to a low of 227, and it runs back. It touches the candle. It fails to make a new recovery high, 357.98. It makes a round number open. And then it starts on its way down. It makes the pattern that I call the dreaded H. I also call it the Groucho Marx eyebrows V-shaped reversal. I'll be right back, and we will be back with Michael in New York talking about ISRG. What is the wave count in the Chapman wave?
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday, Wednesday, Friday, 11 o'clock till noon at 877-927-6648. And my service is the opening call, very comprehensive newsletter that goes out every morning, starting out. This morning I think I started sending out charts at about 6 o'clock, and it's a.m. Eastern Time, and by 8:35, 8:37, the final chart, which is the Trader's Corner, gets sent out. And I also show the E-minis. I show the E-minis in terms of the 120-minute and the 10-minute chart, if I can do the 10. And I believe we probably made a peak G. It's a little unusual. Peak G with a cup formation in the S&P E-mini 120-minute chart, but I'll only get confirmation if the E-mini goes under 1370, closes under 1375. And the 10-minute has given a peak D top, and we're on right now. We're talking with Michael from New York, and we're looking at ISRG. So, Michael, where we're up to now is the double top failure, 357.98, April of 2008. Then the price comes down, trough A, trough B, trough C, trough D, trough E, and that E is a doji E right on the 200-period exponential moving average of 84.86, and it starts a brand new move to the upside, and it goes sharply higher to a new recovery high. I didn't put that in, at 393.92. That 393.92 gets a parallel wave count E/A. E because I'm continuing the previous buy mode, because that, no, cannot. It cannot be an E, it has to be an A. I made a mistake, because the previous low was 85.63 and this went down to 84.86. So this is a brand new buy mode. It goes to peak E. It goes to peak A, pulls back, and then there's a doji. It goes to 393.92. Then there's a doji at 246.05 the week of the in November of 2010. Now what happens is it starts a brand new buy mode because it has higher peaks but underneath the previous one. And I always want to count. I want to be ahead of the game, so I want to count every peak. I want to know the most important objective in the ChapmanWave notation is to know where you are. As long as you know where you are, you don't go to jail. Or you don't have to, there's no repentance or anything for making a mistake. The mistake is not going back and reviewing to see exactly what the possibilities are of either going up or down. And in this case, you get brand new peak A, and that peak A was on the February of 2011 at 346.79. In April of 2011 at 377.84 is B. C is 415.19, July of 2011. It breaks the resistance. It snaps right through it, goes to 591.84, and now we're in peak D. The MACD is still positive, but the fast-moving average has turned down. Stochastic is at 81%. We've got a day to go, and so far it is still positive, even though you and I can see from the chart that the fast-moving average and the slow-moving average are together turning down quite sharply. But over 80% still says that's okay. Now, I've not put a down arrow on that peak D. I will put it down. I'll change the plus sign to a down arrow if or when the fast-moving average on a monthly basis closes underneath the slow-moving average, the red line. Is that what you get?
Yeah, I see it right now, yes.
Great. Now, what's going to really help you is that the weekly, remember I've spoken about channels. I've said that the history, I like to say that you've got to, Larry always talks about trade what you see. And I love to keep that objective in mind. And I say, what are you seeing that is a repetitive pattern that maybe hasn't repeated in other years, but for the past year or two has repeated? And we've seen the GLD has this long up channel, goes out of it, comes back in, tests it, and as long as it's holding the up channel bottom, you're still in that up channel. If ISRG, and I'm pretty sure, I'm absolutely sure this Roman candle doji that we had last week, if ISRG gets even into the 472, halfway into that wick low will be tested, and this up channel going between, well, it's rising, but going between 462 and 447, that would be my objective. If in the next month ISRG closes below that, then you look at the monthly resistance support line that was resistance, and you say, this is going to be tough sledding for ISRG. And the way I'm looking at it, I have to tell you, you're short, right?
No, I have no position. I'm wondering when you would recommend putting this on.
Okay, I'm going to recommend two positions. One is a position right now at 485.57, small position, and that has a pretty wide stop. And at this particular point, I would have a stop of 485. I'd have a 20-point stop. That's not even 5%, but a 20-point stop. In other words, if it took out the high of 501.69, that still gives you a little room, but that's the area that I'd be a little careful. And then I would put another position on at 494 with only a 2-point stop, because right at 494, the 200-period exponential moving average, that's where it should reverse down. The stochastic and MACD are trying to turn higher, and I believe that it's worth an attempt on the short side right now, because what you really want to see is not to get the second position. You want a confirmation that it takes out the bar of the 25th of July, the low of 475, and you wanted to do it preferably by Friday of this week. If it does that, then you can call me up and we'll talk about adding to the position from a lower level. Hope that helps you.
Yep, great.
Thank you very much. We were talking with Michael in New York. We're going to go all the way down to Florida, Arcadia, Florida. We've got Ari online. Hi, Ari. How are you?
I'm doing pretty well, Basil.
Good.
I'm looking at silver wheaten SLW.
Okay, now, silver wheaten folks made a peak F-top. Now, this is just a wonderful example. I must write this down. A wonderful example, I'll turn to the page right now, of the MACD's fast-moving average. The MACD, which is one of the technical tools that I use, series of moving averages, had the fast-moving average cross-positive in the monthly chart back in September of 2009, and the price did not break down until it made a doji. I call that a silent doji. A doji, long-legged doji, in March of 2011, went to a nominal new high the next month of 47.60 and has pulled back ever since. The MACD and stochastic are now turning down. You can see the fast-moving average started to turn down, but the stochastic was the one that gave you the heads up, and the on-balance volume gave you a fantastic reversal in the monthly. Now what's happening is that the whole series, the cluster pattern series between 22 and 17, round about May, June of 2010, to me, that looks like a target area. Now, before I even ask you whether you're short or whether you're long or what you want to do, I'm just going to say to you the parameters I'd be looking, SWC, trading at 27.78, up 31 cents. The way it's looking based on the MACD and the slow stochastic says when this little bounce is over, and I'm not sure it's going to close above 30.34, which is the 9-period exponential moving average, close that is, on a monthly basis, the MACD says, be careful, because in the next 3 or 4 weeks, if it takes out 22.94, then that cluster pattern going down to between 22 and 17, that's the area I'd be looking at. So it's going to take a tremendous spike in the arch pattern that's forming in the weekly for silver wheaten to break out above the last high of 28.89 to 29.09. That area is going to be key to watching exactly what happens. Now I'm going to ask you, Ari, what position do you have?
As a matter of fact, I have a long time short and short time long.
Okay, so that I was going to talk about, because I remembered you had a beautiful short from way back, and in fact that short is still doing well for you. Now what we're looking at on the daily basis, and I would agree with you on a short-term basis, it's been a very nice move. It's in leg C in the daily chart with the most recent low after the peak D, long-legged doji, which was retested. Isn't it funny how these things get retested? It was the high of the 20th of June at 29.09. It goes all the way down to the 25s, 25.15, and bounces back to revisit that wick, not the wick, to the candle itself, between 26.44 and 26.20. On the 22nd of June, what does it go to? It spikes up to 28.89, and then it goes to a lower low, and that starts a brand new buy, 25 round number. You saw that, right?
Yes.
Okay, and then what happens? You get a W formation in the stochastic, the MACD turns up, the histogram turns up. So far, this is leg C. I'm suspecting, this is going to be so interesting. If you don't mind, I'm going to put a little bit of the package together of what I'm looking at between gold, the dollar, and the different aspects. Would you mind if I did that? And because you're in the position, both positions I actually agree with right now. There's nothing really to do other than to watch certain aspects. So let me, if you don't mind, I'm just going to quickly, folks can watch me, I'm doing this. This is the 120-minute chart. I have no idea whether it's going to work or not. That's B. That's B. That's C. It goes to the requisite D. Gets a pullback, another arch formation, but a successful one with the doji. Folks, I'm doing the 120-minute chart. 120-minute chart says A, B, C, D, E. On a very short-term basis, it's getting a little bit overbought in the 120-minute chart. Let me check out. Someone in the den said, Basil, I love your 120-minute chart stopping at DOE, but what about 120 moves down? Do they go to DOE? All right, let me try to deal with that question, Adamant. I'll try to get to it at the end of the show. Now, this is very important. Based on my monthly chart of SLW, I have to, the tide, as far as I can tell so far, is that the tide is, it's going to lower lows and lower highs. Okay. The weekly chart says it was doing that until it made the low most recent low of 22.94 the week of the 18th of May. But all it did is it went to a peak B at 29.09. It pulled back to a higher high, sitting right. I'm going to make this a little. You'll see little dots on this line here. The line we're looking at is a weekly chart. The one in the middle is always a weekly chart. And you will see that, in fact, what's happened is it's making a low-level consolidation. What I like to do is to consider that the arch formation, which is a potent downward move, if it holds support, I have to respect that and say it could go to a higher high. Then what I do is I grab my rectangle and I say, where's the most obvious line of resistance and line of support? And there's the rectangle. And that says silver wheat, under the best case scenario on a shorter term, could go to 31.03. That's still way below where you shorted it at, right?
I shorted it close to 40.
I remember it was a great entry point. Now what we're looking at is that on a short-term basis, where would it fail? We know where it can go to on the upside if it takes out 29.09. That closes above 29.09. But on the shorts, on the other side, it says the stochastic and the MACD have had a fabulous move to the upside, and yet the price can only bounce to 27.91. So that says to me that there's wheel spinning. In other words, you're using up energy, you're usurping energy, but you're not getting the same proportionate move out of the price of the stock. So that tells me I've got to go to the 120-minute chart, and that 120-minute chart says everything's still good. If it does not close above 28.13 in any 120-minute bar over the next today and early tomorrow, but instead by the end of the day it's turning down and goes to 27.37, consider a little bit of a pullback here. But that also tells me that the most important high I'm looking at is 28.89, the peak C minus failure. It's one of the few failures we've seen in this 120-minute chart. And that usually says you're going to a lower low, which is exactly what it did. So that's an area. So all I'm going to say to you is stay in your position. And one part of your newest position, you could put a stop in at, say, 27, underneath the low of this bar. Just a small position you take off at 27.63. It's at 27.90. Otherwise, you just use that as a trading stop. But the larger position says if it closes under 27.30, I would take more of that position off, and then it has to really quickly start moving higher, because if it starts moving down, that stochastic in the 120-minute chart will pull back, and all of a sudden, the stochastic that was starting to improve in the daily is not going to work at all. You're going to deflect lower. So those are the parameters I'd be looking at. In the meantime, congratulations on a great long position on the short term and a short position on the longer term. I think that's great way to be playing this. I don't think anyone should ever be afraid of having a counter-trend move against your core position. They're two separate mindsets. If one is just setting in locking in concrete a particular tidal trend, the other one says, hey, I'm going to surf the waves that are going up towards the shore, even though the tide is going out. Great position, Ari. Congratulations. Thank you for calling.
Take care, Basil. Thank you.
Thank you. Now, the question to the downside. Folks, on the downside, I make a big deal that on the upside, I make the effort is exactly that. The song, the ChapmanWave, buy at the low and sell at the high. Remember, the market goes up, market goes down, goes all the way through the different things. I look at the MACD, look at the different peaks, goes to A, B, C, and D. Then it can recycle higher. But on the way down, I use the technical indicators much more, because I use the letters just to say, if it had a very sharp A and then a very sharp B, most of the move can actually be done. I have different ways of gauging it. So the letters are important, but they're not as important as on the way up. I use technical indicators more. I'll be right back straight after these messages.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
I was asked over the weekend if I would take a moment just to talk about the volatility index. The VIX index, which is made up of synthetic options prices at the near month, I believe it really is a reflection, as I read it, of people talk about fear and greed. I'm not sure about the greed part of it. There's an interesting thing. Sometimes we hold a position in our heads. We have the logic saying, I'm not being greedy, but everything is working. Why should I take my position off? Rather, let me be stopped out. Now, that you could talk about as being greed. I know that's money management. So I rather talk about it as a degree of complacency. But it makes it even more imperative in my work to focus the detail on selling pressure and buying pressure. So, as I see it right now, the volatility index at 18.06 is on a line in a monthly chart which says if the cycle dates that I've had continue to work, and the left side, right side, I call it the Eiffel Tower formation. That was the Greek crisis of May of 2010. Has there not been a day without a Greece crisis? So May of 2010, going back all the way down, that was at 48.20, going back to the 14.27 lows, having one spike of 31.28. Also, it was a downgrade, budget crisis, etc. But then it had a spike up to the 48 round number level of, that was August, I believe. Yeah, August of 2011. But now look, you've come back and you've gone to a lower low, 13.66. We had 3 months ago, we had that May rally with a close above the 9-period moving average, went to 27.73 last month, and then pulled back sharply to the low that we just made recently of 15.45. What was it, 2 days ago or something? Well, that says to me that the level between 18 and 19 is important, but it is really the 20.22 is the 9-period exponential moving average. We've got 1 day to go for July's close. If July closes anywhere in the 19s, that's tomorrow. If the VIX closes in the 19s, it says, be careful. You're starting to make a higher high, and possibility at 15.44, a higher low. So here's the way I'm looking at it. What is really key to my work, because there's a left side, right side price time match which says November of 2012, there's a chance that in that particular time frame, if you got the same matching sequence of U-shaped patterns, that we should be testing the 46 to the 49 area in the VIX, which makes it the most volatile period for the stock market. How would that start to fail? And I always look at both sides of the coins. It's absolutely imperative that you look at it. If tomorrow the VIX closes at about $17.30, and all the way into August, there's no break of 27.73, but even more important, no break of the 25s, but instead the volatility index remains stuck between 19 and the 14 to maybe the 13 area. If that unfolds, the S&P and the Dow, dragging up the IWM, the Russell 2000, and the Qs, will manage to go higher and retest the recent highs that we made back at 13,300 for the Dow. Make it as clear. That's the way I'm looking at it. Thanks for being here, folks. Stay tuned for Larry Pesavento. We've got a programming all the way through to 6. My service is the opening call, and I'll be back Wednesday morning.